I'm sure you might have heard about this term KYC. What is KYC? Know your customer. Few people call it as know your client. You might say that I'm doing my own studies of technical analysis. Why do I need to know my customer, or why do I need to know my client? But instead of KYC, what I've done is I have used another short form. Instead of that, it should be KYS. And what is KYS? It is know yourself. What do we mean by know yourself? I'll tell you what happens with majority. Acha, this term is not used anywhere. This is just my term. Know yourself. Now, what do I mean by know yourself? Many a times it happens that I take a trading position, okay, with a buy call. And has everyone experienced this at least once, that you feel that the moment I buy at this price, let us say, somewhere the stock market comes to know that I have bought it. And after that, what happens? Prices are going to crash. So you always feel that, what is happening? The moment I buy, it starts crashing. Someone is maybe keeping an eye on what I'm trading and what I'm not. And then what happens? Let's say you bought into Infosys, just as an example. You buy Infosys at this point and it's going down. Now at this level, you'll say that, but Infosys is a good share, no? I'll buy again. So you buy it at this price again. Then it goes down again. Then you will say that, wow, I will average, very good averaging I will get. Then again it is going to fall. Okay, there might have been some news, like if you remember, there was an allegation that they have played with their financial statements. Okay, now this news analysis is a part of fundamental analysis. Okay, news analysis is a part of fundamental analysis, but analyzing this price movement is a part of technical analysis. Okay, you have to be very clear that for what purpose or for what time frame have I taken this specific trade. If you had decided that this is going to be an intraday trade, it has to be an intraday trade. Finish. You can't say that, but the stock is good, let me keep it for like a month or so. Then from an intraday trader, you become a short-term investor. You convert your profile only. Correct? Then you feel after 1 month also it is here. Then you feel that let's hold it for another 2-3 months. And you go as a medium-term investor. And finally, can I say the same old story would be for Yes Bank also? Absolutely. It was trading at 400 levels. And here, every person has averaged after every 50 points of downfall. And this is like a suicide. You might say that, ma'am, but it's good not to average. Always remember a thumb rule in technical analysis. I've said this in my YouTube lectures also. Never catch a falling knife. Correct? If you're catching a falling knife, what will happen? Your hands are going to bleed. Exactly, this is what. This is a falling knife. Which type of trend can you see here? It's a downtrend. Now, was it very easily understandable? How was this downtrend evidenced? Tell me. It was evidenced by lower lows or lower highs. So don't get confused. See, this is like a low, this is a high. So are the highs going down or are the lows going down? Both to some extent, but majorly what is going down? It's actually the highs which are going down. So you can see here, this is, just check this out now. If I draw a line, it's a clear cut like this. But this level is more or less, so it's like parallelly going down. Correct? So this is evidenced by what? Lower highs. More specifically, of course, there are lower lows also. Lows are also going a little bit lower, but a little bit. Is this okay? So whenever you're talking about doing this, and like this I was talking about, which type of trend is this? Uptrend. And now you can see even in this case, the drawing that I've made here, even lows are becoming higher. 1, 2, 3. Acha, could it be like this also? 1, 2, 3. Now what is happening? A very typical case of higher highs, but lows are more or less same. More or less same. Maybe a little bit slight uptick, but more or less same. Is this also understood? Yes. So why did I talk about this? Know yourself is very important. Just because the share is falling, are you going to buy it again? Are you going to average it? Answer is no. So what are the types of traders? Who are you? Whenever you are taking any trade, define yourself. Who are you? Number one, are you an intraday trader? If you are a trader, very important, without any doubt, you have to close the position within the same day. Don't convert yourself. Okay, so very important. Second, are you a short-term investor? If yes, close the trade within 2 days up to 3 months. That's an example of a short-term trader. Okay, if I'm talking about a medium term, then you have to close the trade in 3 months to 1 year. And if you are a long-term investor, then your trade can close after 1 year also. Is this understood? So first thing you have to ask yourself, who am I? Acha, could your position be different for different companies? Yes. In the short term, let us say for a time span of 2 to 3 months, I might be bullish. I'm sure you are aware about these terms, bullish and bearish. Bullish means what? I feel it's going to go up. Bearish means I feel it's going to go down. So I might be bullish on Mahindra and Mahindra for a short term. Okay. But from a long term perspective, let us say after 1 year, or maybe even a medium term perspective, 3 months to 1 year, right now everyone knows what has happened to auto. Auto industry is not doing well right now. Of course, who can tell me? Auto industry is not performing well. Is this fundamental analysis or technical analysis? This is a fundamental analysis, because you are analyzing the news. You're not analyzing the price patterns. You're not analyzing the volumes. So please understand, if you know both fundamental and technical, life is very much sorted. So I may say that based only on fundamental analysis, maybe 5 out of 10 trades can be correct. This is just an example, okay? If you know only technical analysis, 5 out of 10 trades can be correct. If you know both, then definitely you can go up to 8 trades out of 10 correct. You say, ma'am, itna padne ke baad bhi only 8? 8 trades is also very good. No one can get 10 on 10 correct. Okay? Because had there been a mathematical rule, if this happened, this has to happen, then everyone would have only bought, no, then there would have been no seller. Correct? So I'm still saying 8 of 10 correct trade is a very good ratio. So what I was trying to tell you, if I am personally feeling that Mahindra is good in the short term, what is my profile as an investor? What is 2 days to 3 months if I feel so? What is the profile as an investor? Short-term investor. Okay. If I'm talking about L&T, Larsen and Toubro, I feel that it's going to be a good bet in the long term as well. Because government is focusing more on Sabka Saath Sabka Vikas, and Vikas mein one important point is infrastructure. L&T is a big time player in infrastructure. So here I'm believing in the short term story or a long term story? In a long term story. So can I say I might buy L&T with a time frame of more than 1 year? So tell me, who am I? Am I a long term investor or a short term investor? Long term investor. But so this is like a split personality. I might be a short term investor, and at the same time I can be a long term investor also. It depends on which stock I'm talking about. But if I have talked about M&M as a short term investor, and if it does not perform well, similar point 1, 2, and it starts like this, can I say, "Arey, but M&M is a very big, Mahindra and Mahindra. Let me try it for 6 more months." This is where you're going wrong. Okay, so this is where you are actually confusing your profile. You had chosen the profile for a short-term investor. You have shifted yourself from short-term investor to long-term investor. Don't do that. This is very clear. So in fact, I would suggest everyone that whenever you're taking your first trade based on technical analysis, right from that, first you have to define what is the time frame. If your target is not hit within that time frame, you have to book your losses. Okay, so target price should also be fixed, and your stop loss also has to be fixed. Is this okay? So very important point is you have to know yourself. So if you just want to write this down, a trend and reversal trend analysis we'll talk about when we talk about trends. So very important is know yourself and who are you. We'll just quickly jot it down. Know yourself, who are you? What is the first one? Intraday trader. If you can be a bit quick while writing, I know you don't have practice for writing, you have more practice for typing. It'll be a good experience. Good old days. So intraday trader, who is he? Closes the trade within a day. Second one is a short-term investor. Short-term investor. Who is this person? Who closes a trade in 2 days to 3 months. 2 days to 3 months. Next one is a medium-term investor. Medium-term investor. And time frame is 3 months to 1 year. 3 months to 1 year. And what is the last one? Long-term investor.